So what we are essentially saying here is that if Amazon has any funding shortfall, if it will raise capital by issuing bonds, then we will have additions or repayments to the long-term debt. So that is why we just had an additional schedule for that in case there was any funding shortfall. So this is a simplified approach to debt modeling. However, it could be very, very complex. So this is just a very simple approach to debt modeling where if there were any additions to be made, we're gonna be determining that later on. So for now, we could just link this one cell here, the total proceeds or repayments from the long-term debt. Just link that up to the cash flow statement, and we know that it's a cash outflow since we don't have any additions that were made to offset this repayment. So we have that set up in place there. And then for the principal repayments of finance leases, we have this already also set up for us, summarized in the finance lease liability. So we can go there and we grab the principal repayments under the finance lease liabilities. So we already had that summarized here. So we have the total principal repayments. So this is, again, what we did here before was that we remember that this was a total lease payment that included both the interest and the principal. So the total debt service for the finance leases. So we had to, since all of the existing things here, we had the existing debt, existing lease liabilities included the lease payments here included both the interest and the principal. So we had to deduct from the total lease payments the interest that we already included here, so that we are not having the interest linked into our principal repayment. So we had to net that off, and also that's why we had these total principal repayments on the finance leases here. So here we just grab this one cell, and since it's a cash outflow, just make sure that we're switching the sign so we can fill this to the end of the projected period with Control R. So having that set up, we know that at this time Amazon, under our observation, we know that they will not by any case issue any shares, and as a result they will not pay dividends. And even if the issued shares, Amazon is a high growth company, and we know that for high growth stocks, we know that for growth managers or growth stocks, they don't pay dividends, or they pay little or no dividends. So that's why we have this assumption here for no dividends to be paid, even if Amazon might issue stocks in the future. So we have that set up there. So the only thing that we have to do here next is to account for the proceeds from issuing equity. So if there will be any common stock that will be issued to raise capital for any funding shortfall. When we talk about funding shortfall here, we are essentially talking about if the opening cash balance, Amazon's cash balance on its bank statement, if we add to that the cash generated from operating activities, and we deduct any cash that was used in investing activities, if we put all of those together and we realize that there is a funding shortfall, it means that there is not enough cash to finance its operations, then Amazon will need to go raise capital by issuing bonds or issuing shares to the public. So that's exactly what we are seeing here. So that's what we are seeing here. Either issue bonds, issue shares to the public, or issue shares to its existing shareholders. So that is what we are seeing here. And if that's gonna be the case, then whatever proceeds or whatever additions to issuing shares will be added here as the proceeds from issuing stocks. So we're gonna be modeling that when we are done with the capital structure. So for now, we have done almost everything right. And the only thing that is left here is to account for the common shares under the balance sheet, and also in the income statement. What is left is to account for the basic earnings per share and the diluted earnings per share. That will be based on the weighted average shares used in computation of earnings per share for both the basic and the diluted. So if there will be any equity that will be raised, then we're gonna be having the previous balance adding to whatever equity that was raised in that particular period. They will take that to the end of the projected period. So that's exactly what we're going to be doing here. So hopefully this gives you an understanding on how to construct Amazon's financial statements up to this point. As you can see, we have covered a whole lot here. We have covered a whole lot.